Good morning, everybody. Well, mini crash over. We shall see how far it gets tomorrow, but we can only rely on what we do every day. And as we start with the futures here, a giant, nasty, big, bearish, wide range bar. And so we go to our factory work. Does today stay in the lower half? Does it consolidate over the next day or two for the next drop lower, which could be a measured move? Or was yesterday just one of those fluke days that we've seen in this market before? I mean, especially last year, we've seen, I don't know about days exactly like this, but we saw big red bars get brushed off and the market continue to move higher. Technically, based on the weekly chart, that's certainly a possibility. So as short-term traders, especially intraday traders, um, we have to be, as we always say, objective. And when things move fast like that, and especially intraday where it looks like the world's coming to an end, you go to a higher time frame to put things in perspective. And I'll take a look. And the weekly time frame is just a consolidation within a very strong uptrend, which I have been using the word self-correcting. And self-correcting, by what does that mean? You know, well, it means that there's overlapping bars. You see top bottoming tails like this where it corrects down and comes back up again. It's a bit of a choppy, somewhat erratic pattern that corrects itself along the way without large pullbacks like what we saw here. Right? So, I mean, if we saw something like this on the weekly time frame, I mean, that would truly be, you know, amazing, but we wouldn't want to see something like that, because the implications would be very terrible for the economy and investors, so on and so forth. So again, putting things in perspective, you know, if you were to look at just weekly charts, you'd say, oh, what are people getting excited about? What's the big deal here? So we'll see where this ends tomorrow at 4 o'clock. And see, it came down to the 50 MA. The Dow actually hit the 50 MA yesterday. And you can see things are kind of bouncing off here this morning. But that being said, as far as the daily trend goes, that's been violated. We look at pivot highs and pivot lows, and things have been making higher highs and higher lows. And yesterday broke down under the low. So 380, 3980. Let me take a look at SPX for tomorrow. But anyway, look, resistance is over here. And so while we pick something like minor resistance, it is subjective as a reference point because it's beyond what's directly to the left. As you condense data like this is here, one bar, you can't see what's inside of it. We go to an intraday time frame and I can see this congestion. So as this W bottom has formed and prices are retracing higher, this is what's directly to the left as we can look inside this bar. That's where sellers are going to be, somewhere in here. Right? So we'll see as it gets up. 3,800 is going to be a big stiff number to get through, of course, and the top of that congestion. And so SPX for tomorrow, thinking ahead, Rod's asking me, 3980. If there's juice there, I would say that is a no-brainer, you know, and I'm exaggerating here, but, just based on the chart, I would say, mortgage the house, that it's not going to get to 3980 tomorrow. And 3890, that sounds more like it. I would say, look, McGraw, all we know, right, based on price pattern traders, is what is historically the norm. Historically, in one day, this to get above that high, and I don't have the actual black and white statistics, but from my memory of almost 30 years, I can't remember it ever happening, ever. So is that a reasonable bet? I would say absolutely yes. Absolutely yes. Now, can the markets retrace this bar? Yeah, it could even do that today. But to get above that high, I would say no, no. So again, let's see what it does. Can it even get past 3,800? Hey, so, you know, logically, again, big bar like this, it's going to stay in the lower half. It could just stay, let me go back to the futures. It could just stay in the lower third or so. And, just hit this area and chop around down here, uh, today and tomorrow. And then we'll see what happens next week. None of us really know what the future brings. We just look at price charts, and this isn't, again, the self-correcting uptrend. It's a greater representation of what I talked about here. You can see it because we've expanded the data, but it's traded under that pivot low. The uptrend in this time frame is over for the moment. Okay, so let's go to the others. Deep move back. It's in the lower part now. If we were to see the NASDAQ futures already tracing up here, and you asked me about SPX, I'd say, you know what? I don't think so. But this is amazing to have recovered if it was trading up here, but it's not. So it's coming off of the low. How significant the futures prior to market open? How significant? Well, they give us an indication, Tony, of what's happening right now. And so when we see, and we can go and look at, the cues and see how they're trading. I mean, because the futures market kind of does its own thing. It can't get too far out of whack with the cash market, or that arbitrage is going to bring it back into where it should be. But as we look at the cues and say, well, okay, they're at 321. Where's 321 on yesterday's bar? And so it's similar to the futures, but it's going to gap up. Okay, it's going to gap up to where relative to what's to the left? There's nothing to the left. 321. I mean, it's not a big deal. But as this is pulled back, I would guess that there will be buyers on dips today until it gets up to, it's not that far. It may just run up to, well, there's your minor resistance, but you can see these overlapping bars right here. So if I slide that over, you see right there is where there's this congestion area. So the lighter area is yesterday's trading, and the grayer areas are overnight trading. So as this pushes up, if I was long, right, this now, my view would be that there's the potential to come up here before any significant selling would show up. Then at that point, you monitor the price action. Now, this is getting short-term extended, but it doesn't have to pull back. So when you ask how significant it is, it's significant within the context of how much it's retracing yesterday. And so far, it's really not that significant. It's normal. It's normal. So this came down to the rising 20, and in the room yesterday, I said, "Hey, I think this is the area, the target area where it would, it'll make a low yesterday," and it didn't quite get there. So obviously, whoever, institutions, traders, whatever, kind of jumped in front of each other and started bidding ahead of the MA, and things began to stabilize and move up. Now, this is still in an uptrend based on our objective black and white, higher highs and higher lows, and this retracement is deep. Right? Granted, it's a deep retracement, but so far, major support is there, minor support is there, and it held How far does it retrace today and tomorrow against the wide range bar? Gives us objective information as to the probability of yesterday just being some crazy move, you know, based on who knows what, people speculate on, the short sellers and hedge funds and all of this kind of stuff. But, you know, we'll just see what things do based on what we do every single day. All right. Dow's up 200 points here. Is it significant? No. I suppose it would be even better if it was gapping down here into this area of support, because as a trade at the open, thinking to go long would be historically a reasonable good strategy based on that short term. Now it's retracing up into the same area that we talked to about on the S&Ps, where there's going to be sellers. So we've got a low in place of some significance for today. I spoke about the Russell being something's going on here. If you remember yesterday's conversation before this all happened, I said, Canada's rolling over. Mexico is starting to roll over. Europe is rolling over. And this market is going up like, nothing's problem. Sentiment is still, up in the stratosphere. Breath has been deteriorating. I've been saying that for a month, like, okay, Greg, I'm sorry, not sorry. I'm sick of hearing, this spiel, and the market doesn't care. Well, yesterday, for whatever reason, it began to care. And we'll see how far this all goes. But this is still up here. And now breath is way down here now. Where breath is right now, right? Or could be even a lower. If this line was down here, I'd be saying, let's look to buy. But it's not down here. So I don't have a historical measurement of the norm to say this is a buying opportunity just yet. That'll come at some point, but it's not now. And we'll just see what this does in the coming days. And of course, it's not the norm. You've got America, the leader of the free world, turning into what could potentially be socialism, communism. Who the hell knows what's coming here? I mean, people are getting a little crazy.
Hey, Greg, just on the McClellan there, remember you and I had a chat a couple of weeks ago that regardless of the put call, that if it does go down below negative 300, that typically, despite how ugly the setup is in the spiders, that we have seen a bounce when it gets under 300. So it's not a buy signal, I agree. But, remember we were talking about...
I've never seen it under 300 without sentiment being close to a bullish area. Right. So even at minus 200, you can see the markets are bouncing here. So, yesterday was a big move and there's some counter move going on now. Right. So look at pod call from yesterday. Is pod a stock symbol, McGrath? I don't know what that means. Put call ratio yesterday. Well, put call ratio yesterday was still relatively low. It was below 0.80. Intraday it was a bit lower, but you would think on a day like yesterday, traders would have pushed this up even intraday to like 1.3, 1.5. And so that is something to pay attention to for a put call ratio intraday. If I have alerts at 1.3 and 1.5, and if that alarm goes off, I'm thinking short-term low. So, Russell's retracing here. You see the breakout failure and so on. So, and bonds sold off here. Still in the lower half. Oil going up here a bit. That's a plus. And starting to get that turnaround in gold that I spoke about. You know, I'm waiting to see if this pattern actually plays out with the head and shoulders. If this is a good start, if today can hold on to this gain right now. So maybe gold is getting ready. Keeping an eye on that. Of course, silver. Nice. Wow. All right. So, and of course, you know, the transports, we always look, and that's nasty. You know, that is nasty, but it held major support for now. All right, all yours, Dan.
All right. Yeah, that's what's going on. You know, I started the conversation yesterday with these Reddit, Wall Street bets, short squeezes. I was seeing all these crazy, crazy moves. Yeah, now it has everybody's attention. Every, you know, regular news stations are talking about it. But for those of you who get the journal, there's actually some very good articles today talking about this, talking about regulations. Are they doing anything bad? You know, these coordinated things. They were saying, hey, the law is you can't have individually, yeah, you can get on there and chat and say whatever the heck you want. But if the SEC can label them as an organized group, then they can regulate them. And you know, they typed some of the examples of what they're saying. One of them was Wall Street Journal. Some guy comes out and says, okay, we need to pump GME. Everybody, 60 seconds from now, buy 1,000 shares. So anyway, there's I'm not going to waste too much time, but it's a very, very hot subject right now. I guarantee it. I think it's inevitable that we're going to have lawsuits. We're going to have regulations. I mean, this we're in the middle of something very historic here, in my opinion. Um, you know, the battle between the little guys using their Twitter, you know, Reddit, versus hedge funds. So we can talk about it more when things slow down, but a lot of these short targeted things are coming off here pre-market. Somebody just posted in the room 10, 15 minutes ago, a link where Robinhood is saying, we're not letting you buy AMC or GME anymore. You can only sell to close. And I'm just curious. I mean, I would just, if anybody knows, tell me. But I would love to know why. I mean, did the regulators call them? I mean, the paper said even the Biden administration and Yellen and the exchanges, I give Wall Street bets, I give them an A plus for what they have pulled off here in getting these stocks to rally. I'm not saying it's legal or not. I give them an A plus. It is amazing what some of these rallies have done here. So anyway, yeah, I mean, this is our only problem child. We're short calls with the intent to take assignment as a core short because I think this is a piece of garbage fundamentally. But the problem is trade management. Trade management. Even Cuban was on the CNBC today, and he was actually pounding the table, liking these Wall Street people because he doesn't like short sellers either. But then he did turn around, and when the announcer asked him, "Oh, do you think GameStop is worth the value?" He's like, "Heck no! I think they go out of business." But that's not what people are trading. They're trading sentiment, not fundamentals. There was one quote in the paper of that article in the journal that said, and I'm paraphrasing, but there were 2 or 3 very good articles that and one clown on there, the channel name is Short Squeeze Astronaut. That's a channel name or whatever you call that thing by your name, your post. That's what he calls himself. And then he's like, he had a comment that said, he was kind of putting it to the Melvin guy who went under. He's like, yeah, my crazy sentiment is stronger than your fundamentals, something like that. It was just it was an fu to the guy saying, haha. All right, enough of that. Let's continue here. So these toys, if you will, they're coming back to earth. It was GME, AMC, BlackBerry. These were, three of the biggest ones there. Look at that, 28 bucks, now down to 18. Even American Airlines had earnings today. And when I was watching it on CNBC, and when it came out, I think it gapped up like 70 cents, something like that. So let's just call it 17 bucks, round, up a little bit from 16.56 close. And then Kernan got on there, and I think he was saying, oh, look, the Reddit boys this is the next Reddit pump. And look at this, went up to 30 bucks. So my buddy who has some of these stocks, I texted him. I said, hey, your stock's getting pumped by Reddit. It's at 30 bucks. You might want to take some off the table. This was the same guy that Emmanuel, awesome job. I thought of that when you did that. So excellent job. But I told my buddy, sell some at 30 bucks this morning. I don't know if he did or not. Yeah, they call it cyberbullying. No, we're in the middle of very historic financial market stuff right now. All right, so all our opens are fine. So just ask me if you have a question. Let's go right to some gappers here. SKT. I don't, I can't even tell these days now recently if something's been going up because it's been a short squeeze candidate, or if this is truly fundamentals or whatever. I have no idea, but no pattern there. Fizz was on the list. It was on the list from the most heavily short interest stocks in the Russell 2000, along with GME and AMC and BlackBerry. That's where these guys get them from. So this was on the list, and so it's gapping down here, 158. That's a bearish gap, over 50% into this. So this is another one of the toys, but wide range ending. Wide range ending. I will put that. And this is what we call a bearish gap surprise. This is a bear call credit spread candidate. SKT short squeeze. Okay. Yeah, remember we were in Macy's, and wow, we sure left a lot of money on the table on Macy's. Wow. DDS I know was on that short list, short squeeze, list. But whatever these guys are doing, and I know there's people making a ton of money right now doing this. And I'm for entrepreneurialism, so I'll just let the dust settle. I'll let the regulators figure it out. I heard an interesting stat from Maria Bartiromo. I think she said, or whoever, it doesn't matter. Something like the average hold time of a stock is like 40 seconds. And that there's so many of these Robinhood scalpers out there now that has changed the landscape. And then one idea that somebody threw out for possible regulation would be, banning day trading. You have to hold a stock at least one day, or put a tax on it, or some nonsense like that. But again, we'll let the dust settle. All right, this gap up to 790. I have no idea, but it has the footprints. It has the footprints of junk. I mean, of these. Look at this one, ACY. When I first saw it, it was gapping up to like 17 bucks. And the gap's too big. But let's say hypothetically it were gapping to 12, then this would be a beautiful 30-minute high. But this totally, again, has the footprint to me of one of these little short squeezes that somebody went on. Yeah, totally agree, Greg. Well, Greg, there's always an exception if you're a market maker, because then, they're protecting Wall Street and they say, oh, no, you all need me. I'm providing liquidity. Are you crazy? So, we, we know how Wall Street works. And that's why I think Wall Street's pissed right now. It's because these little guys are messing up the financial establishment. All right, we had a bunch of earnings because I had so many of them. I I I went through some and deleted a bunch of earnings. Uh, Thomas asking about AAOI. That's big topping tail. You got to wait for a reversal. Um, and CGC, yeah, that CGC is marijuana. That was on my list yesterday. I was hoping it would be a 1, 2, 3, and it just rocketed without us. If it holds here, it could be a good answer. And Teradyne, that's 100% retracement. That's damaged. Nothing to do right now. CCI, that was a 180 reversal, breakout failure. This could be a 10-minute low. Short watch. Oh, I forgot about our big three and the FANG. All right, so Tesla, that's bearish. That's a bear gap right there. 30-minute low. Let's short a bear call credit spread for tomorrow. And also keep an eye on this, maybe for a day trade short, but I do nothing. I do nothing at least the first 5 minutes. Apple had earnings way off the low here, way off the low, but remember I said anything that rallies 8 bars into earnings, I just think it's priced in, but I don't see any pattern there. And finally, Facebook. Facebook gapping up. Wow. Sloppy pattern, but look at that.